Hi there, Steve Rubis, the Fix-It IRO for Rafficchio Investor Relations. Today we're going to do a Fix-It IRO in action video and discuss data center REITs in investor relations. Specifically, we want to talk about what we see as being the technology leadership void in data center REITs and how investor relations from a Wall Street perspective can help establish a corporate identity, improve management credibility, and ultimately help fill this technology leadership void. A quick Reg FD comment: I own no shares in any publicly traded data center REITs. So let's get to it. Data center REITs are great assets. They sit at the nexus of the development of new technology and bringing those new technologies to mainstream America. The industry has benefited immensely from the development of the cloud and demand from hyperscale customers such as Amazon and Microsoft, other entities such as Facebook and Apple. As long as technology continues to improve, data center REITs should continue to see growth going forward. So right now, we think that there is a technology leadership void in the data center REIT vertical. We think the technology leadership void began in the summer of 2016 with the departure of Tom Ray from CoreSite, followed by the departure of Chris Eldridge from DFT Data Centers in conjunction with Digital Realty's takeout of the company, and culminated in the unexpected departure of Steve Smith from Equinix in January of 2018. So each of these executives were very good at understanding the trends in technology, talking about those trends with investors, and positioning their companies and helping investors understand how technology was impacting their businesses and the data center REIT industry. So the question is, why is technology so important if these companies are REITs? Well, number one, technology trends drive data center demand and ultimately valuation. The golden metric for data center REITs is leasing. If you put a zero up on the board, you're going to have a lot of problems. Second, investors, even REIT investors, look at the space through a technology lens. Equinix is the de facto leader because investors focus on the cross-connect, interconnect business, which is very attractive, very high margin, very solid growth, very defensible. And therefore, it leads investors to look at what assets mimic that interconnect business at Equinix, and oftentimes puts investors in a way of thinking or misunderstanding the merits of business models that might be the inverse of Equinix's model. Thirdly, REIT investors may not be technologists, and therefore they need the information flow on technology trends. Which leads me to this comment that I think the way you unlock value in data center REITs lies in providing the technology context to the story. If all you are is a box that's providing power, you're really not providing the necessary context to get an investor to be really excited about your asset. So data center REITs currently have two problems. One is the lack of technology leadership that we described earlier. And secondly, right now, there's no company that really has a very strong technology identity. We believe an investor relations program from a Wall Street perspective can help companies improve credibility with investors while developing a strong corporate identity around technology. An added benefit of a technology-driven corporate identity should be increased hyperscale leasing. Hyperscale customers want to work with those data center entities that understand the underlying technology trends and can help those hyperscale companies meet the needs of their business. Right now, we think CyrusOne and QTS are the two companies best positioned to fill this technology leadership void. We think CyrusOne needs to improve financial messaging clarity. They benefit from great confidence in messaging and a very capable and charismatic executive team that has exhibited great execution. QTS needs better clarity as well, but we think there are two things that they need to do to be successful. One is convince investors that they can indeed win share in hyperscale leasing, and number two, anchor investor expectations to $3.50 in OFFO in 2020. Doing so allows you to apply a trough multiple of 15 on that OFFO number and get you to about a $53 stock price. Very attractive. We believe both CyrusOne and QTS need to improve investor credibility. The primary way these companies can do this is by establishing the earnings call script, the earnings deck, and the investor deck as three distinct products. These products provide the short-term context and long-term context necessary for an investor to make a purchase decision. By trying to pull double duty with these products, you convolute the message and end up obscuring the context that's needed to understand how your business is performing. If you can provide clarity and context in both the short term and long term, you should immensely improve your credibility with investors. Some additional changes each company should make are highlighting the strength of the executive teams. Both companies benefit from a very strong technology-driven executive suite. These companies should be doing a good job of establishing that they understand what the underlying technology trends are and providing that information flow via their investor materials. Second, create a more formulaic earnings call. By establishing the earnings call as an independent entity, what you can do is start to establish these are the topics that we need to discuss each quarter, put them in the same spot every quarter, and merely update and change data based on what you've learned in the quarter and the performance of your business. The CEO should be seen as the person who is establishing the company as the tech leader and establishing that pathway to where tech is going and where tech is leading the company. The CFO should be establishing these are the KPIs needed to analyze our business and understand how our business is performing and anchoring investors' expectations over the long term. Third, better supplement disclosure would help both companies, especially around identifying top customers. If you look at the supplements, each company obscures who their top customers are. One of the greatest ways to unlock value we found at DFT was being able to discuss our customers, top customers, both directly and indirectly. This is a great way to unlock shareholder value. You can read our full thoughts about these companies at raficchioir.com. We provide more comments on CoreSite and Digital Realty, who we think are not going to be tech leaders because they're very REIT dominant. We also talk a bit about some of the private companies that could fill this void, including Vantage, Sixterra, OVH, EdgeConneX, and RagingWire. It'll be interesting to see who fills this void. If you found these thoughts interesting, we'd love to interact with you. Please email us at stephenrubis@gmail.com or give us a call at 202-997-4815. Remember, at Rafficchio Investor Relations, if we work with you, we think your stock is worth more money. Thank you.